Microsoft Stock, ticker symbol MSFT. This stock is up 40% year to date, crushing the S&P 500. But yesterday Microsoft announced their quarter results and the stock went down almost 5%. So what happened? Since they presented solid results, beat on EPS and revenue. From a dividend point of view, things look pretty decent with dividend yield at 0.77%. But it is all about the growth. A 10% 5-year compound annual growth rate. So could this be the perfect moment to buy Microsoft stock? Beat on earnings and stock price decline looks really interesting to me. Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Microsoft do? Microsoft is the largest vendor of computer software in the world. It is also a leading provider of cloud computing services, video games, computer and gaming hardware, search and other online services. When we dive in the earnings report, we see that total revenue was reported at 56.2 billion, which is an insane number of course, resulting in an 8% growth year over year. To me, this is very impressive. Being one of the biggest companies in the world in terms of revenue and still capable of growing 8% year over year. This revenue is mainly driven by the growth of 15% in the intelligent cloud segment. Productivity is also growing a decent amount with 10%, and the third segment is decreasing 4%. Gross margin increased 2 points, which is also very nice, and the operating income increased 4 points, which is really impressive. EPS is also looking really good with a 21% increase. To me, these results are very impressive. And in here we see a more detailed view of the segments. Office commercial products and cloud revenue increased 12%, which is looking really good. And it is the same for dynamic products and cloud services, with a 19% increase. Office consumer products revenue increased only 3%. The second segment, Intelligent Cloud, is looking really good with a 17% increase in server products and cloud services. Azure and cloud services see a 26% increase. The third and last segment sees in the main segment a big decrease in revenue of 12 to 20%, which is of course not really looking good to me. The interesting thing about these earnings are that Microsoft was slowing down a little bit in terms of revenue growth, but in here we see that Microsoft is fully back on track, which looks really good to me. The outlook is also looking really interesting, with revenue in the next quarter in the range of 53.8 billion to 54.8 billion. In this last sheet we see that it is expected that Microsoft Cloud gross margin will decrease 1 point year over year, and that productivity and business processes segment is seeing a decent growth. Intelligent Cloud is going to see still a 25% growth in Azure and cloud services, but the other two sub-segments are expected to decrease a bit. The third segment is expected to see declines in the bigger sub-segments, which is also something to keep your eye on. And now that we know more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week, and also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Microsoft is a 2.5 trillion market cap company, making them one of the largest companies in the world. PE ratio is at 36, which could indicate that they are at a premium right now. Later in this video I will show you my 3 price targets for MSFT stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 207 billion, and in this graph we see that revenue went up nice and steady. Since 2016 margins were increasing. But ever since 2022, margins are decreasing a bit, to a point where it seems to hover. To me, 30% is still a great number. EPS has increased an insane amount in the past couple of years. In the long run, it is also looking pretty decent. Analysts expect EPS to increase only a bit in 2023. But after 2023 it is expected to see double-digit growth up to 26%. For the revenue it is pretty similar pattern, with a smaller increase in 2023, but after that big increases up to 14%. Return on assets is sitting at 13.7%, which is a great number. Return on equity also looks really good, and the most important number, return on invested capital, is sitting at 22%, which is a great number. Unfortunately, it is lower than the 5-year average, so that is something to keep your eye on. Current ratio is at 1.9, which looks pretty good to me. Over a longer period of time it is decreasing, which is not a bad thing. Total debt is sitting at 79 billion, and I prefer companies that can pay down at least a third of the total debt with the total cash position. Right now total cash is sitting at roughly 104 billion, so they can pay down all their debt and still have some money left. This is really impressive. However, it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, even at a steady and consistent pace. Shares outstanding are decreasing, which is a good thing usually. But with Microsoft you could argue if this is the right move at the current valuation. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 0.77%, which is a decent number for a tech company. Annual payout is at $2.72 and payout ratio is at 30%. I prefer 50% or lower, so right now they have 70% left in cash to buy back shares, pay down debt, do acquisitions and a lot of things. I'm not sure why it is not displayed here. The 5-year growth rate is at 10%, which is a great number and one of the reasons why I love this stock so much. On top of that, they increased the dividends for 18 years in a row. And if you take a look at these numbers, the dividends paid since 2010, you see that Microsoft really likes to increase the dividends, which is very nice. And payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that over a longer period of time, payout ratio is decreasing. I really like the number at current levels. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to grow at historical growth numbers, which is very nice. Overall these dividends look pretty good to me, but how about the historical returns? I decided to compare Microsoft stock with the overall market, in this case the S&P 500. Next to that I added Oracle. On the 5-year chart we see that Microsoft crossed the S&P 500 and Oracle with a 234% return including dividends. Oracle is also doing a great job with 161% return. On the 1-year chart it is looking pretty different, with Microsoft returning 36%, still beating the S&P 500 by a significant amount. But Oracle has the highest return with 60%. On the 6-month chart it is Microsoft with the highest return again, 46% in total, beating the others in this list. On the 1-month chart it is the S&P 500 with the highest return, which is very interesting. But it has to be said that it is only a small difference. So bottom line, Microsoft beats the S&P 500 and Oracle in the long run. But after recent earnings we are seeing a decline in stock price. So is this the perfect time to buy Microsoft stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 8%, 10% and 12%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 32, 33 and 34%. And for the free cash flow margin I'm putting in 30, 31 and 32. For the PE ratio and the price of free cash flow I'm filling in 20, 22.5 and 25. It is a massive company that is still capable of growing in high amounts. In some areas they also have a moat in my opinion. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, Microsoft stock is at $334. I hit analyze and we only see red numbers. We have a low price target of $172 to $184, which is a big drop from the current stock price. We have a mid price target of $224 to $238, which is still a big drop from the current stock price. And we have a high price target of $291 to $309. To me, the high price target is the most justified here, indicating that the stock is still overvalued right now. My final conclusion on this company is that I love the business. It is the biggest investment in my portfolio, and with reason. Although I do think the stock price needs to decline a bit before buying more shares, I don't think they are massively overvalued. It is one of the biggest companies in the world with great potential for the future. I'm really impressed how they are still capable of growing in a significant amount every quarter. For now, I'm just waiting for the stock price to decline. And to be honest, a day like yesterday is probably one of the best days right now for Microsoft. Great earnings and still a drop in stock price. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.